Hi everyone, 19th of January, it's Friday, it's 10:33 a.m. here in Australia. Here's my latest video blog. So it's Happy New Year and all of that type of stuff. It's been a very interesting period of time. Last year was pretty much the year of crypto. Obviously it's been around since 2009, since Bitcoin came out and has done what it's needed to do to get, I suppose, more market share and more attention, and we've seen an exponential growth in crypto in the last, especially in the last 12 months since probably January last year. And I think 2018 is going to be the catalyst year where we see a lot more legislation, a lot more governments taking charge in regards to bringing and legalising, even though it's legal and lawful to be able to use crypto, but in the mainstream media sense, making or legitimising crypto to a higher state. Now, what we've seen, and I've got a couple of things I've written down. It's just, I think the big thing is, and we talk about a lot of these things in my Telegram group, or our Telegram group, Crypto Nut Insights, which you're welcome to join, even if you want to be a passive observer. The link's in below these videos. But we talk about cycles, and we talk about the graphs, and we talk about reading the entire space and what's actually going on, and trying to get a feel for. I think there's a fair bit of manipulation, and I have talked about it in previous videos, and it's not a conspiracy. It's very, very clear. Anyone that's been in the space long enough is starting to see certain cycles. We're seeing Autobots. We're seeing a lot more very deliberate pumps. We've seen very deliberate movements of, let's say, $100 to $200 billion going in and out. There's no doubt they could be different groups or a collective. I think there's a little bit of collusion going on. There's no doubt that this entire space is destined for success as far as I can see. And this year is going to be no different. We're sitting at 558 market cap. Earlier this month we saw a massive slide after a huge, very positive November and December 2017. Alts went through the roof, and everything was blossoming, a lot of green, and we saw a big retracement. Even Bitcoin had a really good moment, then it obviously started to retrace after a massive pump. It went to about 20,000 US dollars or whatever it is, about 24,000 Australian dollars at one stage, and then came back recently, and as you can see in this graph, right back down. I think on Bittrex it got down to about 9,450. Those prices will move around based on the exchange you're on, but that was inevitable after having a massive surge for Bitcoin and even the alts. And what I wanted to do is I've brought up, I've got a couple of graphs that we've shared in the group, and I'm just going to bring them up and just have a little chat about them. So the first thing is, look, this is not about financial advice. I think it's just about sharing information. I think it's about knowledge, or becoming more aware of the whole space, and you start to see cycles and patterns a little bit more often. And one thing that we have been able to see is the speed and aggression of these movements, especially when we see 100 or 200 billion removed out of the space. Now, it doesn't happen in a blink of a second. It does happen over a period of time, and sometimes they're 3 days, sometimes they're 7 days. If you're going to look at this entire retracement here in this graph, you could say it's from the 8th of January down to the 18th of January. So that was a 10-day bearish trend. And if you're not reading the graphs, when you've got to zoom out to get a really good perspective of these, and try to get a feel for them if trading is your thing. But what we have noticed is that there is no doubt that January in itself, and I've got a graph here, I'm going to bring it up, it's called the January slumps. Now, someone's very diligently gone and analysed 2015, 2016, 2017. Now, there's no doubt that there's a trend here, a pattern. So in early January, we're seeing a very, very big aggressive pump through November and December. Christmas looks all rosy, and then in the first couple of days, first week or so in January, we're seeing a massive dump. And it's quite aggressive, as you can see here, these little spots, and it pulls back 30–40%, which is very, very normal in crypto, and it's still going to be normal in crypto until the market caps get to a level where a lot of the coins find new stability. And even with Bitcoin, I think at one stage had a $250 billion cap, it still is vulnerable to major financial positions moving in and out of those spaces. And anything, if $250 billion cap can't support a 50 billion movement in regards to stability, you can imagine the volatility of anything well under that. You know, the 1 billions and the 10 billion dollar market caps have also been heavily affected. So that's just the way it's going to be, and I think 2018 is not going to be any different in the sense that we're going to see volatility, but $1 or $2 trillion is scheduled to come into the space, and I think we can look forward to mimicking exactly what we had last year in the sense of the cycles. So we could talk about March. I mean, this is speculation, but we've got to have a look at the graphs. You'll see that I think March, April, May was very positive. We had I think it was a July, August period. Now, we did have some forks in there, so that behaviour might be different this year. I think we could probably count on January next year having a slump. So we've had 4 in a row. Are we going to see 2019 have a January slump? It's probably worth putting a little reminder into your phone or onto your diary to remember to maybe be prepared for the January slump 2019. But that's looking ahead, and that's just showing a little bit of due diligence based on some information. But again, this is speculation. This is not, I can't forecast the actual truth, but you know, we can share this information and hopefully it benefits people. Because I think the big thing about getting into crypto because of the volatility is the key is to find these dips, these big ones, and there's been 3 or 4 throughout the year. And I'll bring this up. So this is December. We saw a flash crash, and that's probably just part of. That was just a big profit taking before Christmas, and then we saw this big rise into January, and then we saw the January slump. Now, there's no doubt if we come down, and I think I've got them, I haven't got the graph, but if we look at going back into August, we look at the April, May rise of 2017, there was about a 10 to 20 day bearish trend, very similar to this particular movement here. So we had the high of the market cap, and then it comes back, and then there's a big aggressive panic sell over 1 or 2 days, and it hits a bottom, and then it bounces back very aggressively, 30 or 40%. If you were buying down here, you would have been very, very happy with the results. And I can tell you there's been 3 or 4 of these all the way through 2017. So sometimes it pays to trade less, and sometimes it pays to get your money aside and just wait for these massive dives in the markets and make sure that you're buying at the relative bottom here and trying to estimate by a little bit of research on the graph if you are at the bottom. So it's always relevant, and I think we do get a bit excited about certain coins, and there's no doubt that coins have their own ecosystems with their own news, and I do get that. But I think when you look at the entire market, and we're talking about bull and bearish trends, it does pay to have a look at the overall graphs. And that's just something I wanted to talk to you about, especially at the beginning of 2018. I don't think there's any harm in looking back at what happened in 2017, and can we see some patterns? Can we find these 2 or 3, 4 major market dips, and can we analyse whether or not that's going to happen similar times in 2018? And I think we could probably count on very similar behaviour at least 3 or 4 times this year. Something else I found, or it was actually courtesy of someone in my group, a cryptocurrency correlation graph. Now, anyone that's been trading for long enough will know that certain coins tend to move together. Now, I believe it's because of manipulation. I believe it's because this entire space is destined for success, and there's an algorithm and there's a certain entity, whether you want to call it the Bilderberg or the big boys or the bankers, or there's something or someone as a collective is making sure that this ecosystem succeeds. And the way they're doing that is they've got bots and a budget and some algorithms, and they're supporting and propping and pumping certain coins at certain times throughout the year. Now, I've watched it with Verge, Digibyte, BTS, and I think that you could look at the cannabis coins. They all go together. There's a whole heap of particular coins that seem to go at the same time, and someone's actually diligently done some graphs, correlation graphs based on 90. They've got a 180-day graph where they're looking at Ripple, Stellar and Factcom all seem to go together, at some stage within the 180. And that was, so if 180, there's probably what, 2 or 3 cycles of that within a year. And it's happened to create a pattern. So will we see these patterns again this year is yet to be seen. But I think we can probably count on it. I think that 2018 is going to be the year of crypto where it's destined for success. There's going to be a lot of attractive media coming out and trying to get more people enticed to get into the space. I just feel for the people who are buying on the highs. And like I said, it's very easy to get excited and tell your friends to get in when you've gone and made 100% gain over a 30-day period because the whole market's surging. And they're buying at the top, and all of a sudden there's a 15 to 20-day bearish trend. And if you're one of those people, all I can say is don't panic, don't panic sell. And I know there's a lot of emotion. What you've got to do is sometimes you've got to learn a little bit more about the space before you can make trading and decisions for your portfolio. And again, I'm not here to give you advice except zoom out, learn a little bit more about cycles over a longer period of time. And I'm talking about 12 months to 24 months, and then break it up into 3 or 4 patterns that you can see, and start learning about these 10 to 15-day bearish movements and trends, and have a look at these 3-day movements, how aggressive they are. It's very emotional when you've got your money in there and you see it halve, drop 30, 40, 50% over a very, very short period of time. You've got to know how to deal with that and understand what these little reverse head and shoulders, as you can see here, massive 30, 40% rises. If you can identify these a little bit more often, I think you're going to become a little bit wiser. What else did I want to talk about with that is, that was pretty much it. I think, autobots and algos, symmetry, highs and lows, basic stuff. Learn the cycles, learn the graphs. Remember, maybe pencil in January next year. It's a 50-50, but the last 4 years have shown that it's a thing. And probably the only one that I've found so far that's very, very certain. I think the April-March surge is still going to happen. And there's 3 or 4 throughout the year, but I'm a little bit not 100% on those because of the forks that we had seem to dictate behaviour and change behaviour. So BitConnect and Arise Bank are 2 things I want people to be aware of. It's always unfortunate to hear people losing money. I think BitConnect is a Ponzi scheme, and they've been called out on it, and they've had an 80% retrace over 1 day on their shares. So be very, very careful about the Ponzi schemes. And I think there's another one, UziTech, something like that. And there's some others that are coming out very similar. I think you've got to just do some more diligent research. It's very easy to get caught up in I've made this amount of money and this is what's working for me. These type of pyramid schemes, there's always going to be someone above you that's done really well. I think you're best off going to more traditional methods of trading and investment, rather than the platforms that are holding your coins and holding your investments and promising 1% interest returns per day. I think it's just unrealistic. If everyone was doing that, if it was actually a genuine platform, you'd find that everyone would be doing it, and there's no doubt that they're a little bit fraudulent to a degree. But yet to be seen with BitConnect. I think it's happened. I think it's already, people are still buying it. I think it had a bounce back from $20 back to about 50 I saw today. And I'm not too sure, I'm not involved with it, but I don't think you can get on their platform at all and get you, and I'm hoping that people can get their money out. So just be mindful of that. Arise Bank is another one that's come up. A bit of talk in the BitShares EOS forums about the connection between BitShares and Arise Bank. It looks like Arise Bank has raised a lot of red flags in regards to their GitHub and the team, and whether or not they're a legitimate entity. So I think that they've raised about $400,000, could be 400 million, I'm not sure. I think 400,000 for a new ICO or something like that. So I haven't got all the details, I'm just speaking out loud. Probably best to go and have a little look. What's going to happen this year? I think a bit of a repeat of 2017. I think $1 or $2 trillion, if not more, is going to come in. We're going to see Bitcoin have its big surges and alts come back a little bit. Hopefully everything goes in synergy, but we've seen from 2017 when Bitcoin goes on a run, no doubt a lot of the the $1 billion supply coins in particular, and quite a lot of the other $1 million supply coins do bleed into BTC. That's just the traders sloshing. So you've got to be mindful of that. And I think we will see BTC go again. It just makes complete logical sense that it's going to go. It's going to double at some stage this year, based on what we saw last year. And I think that's inevitable for the space. But yeah, I'd be interested to hear what other people think about these cycles and what moments in time that they've seen over the last 4 or 5 years that may help people. I mean, nothing's guaranteed, nothing's certain, but I think more information and more analytical analysis from a wider point of view is probably the best in regards to the entire market. You never know, it might actually help you make some really bold and dynamic decisions. You know, like I said, if you can buy at the bottom of these and do that three or four times a year, I think you're going to do really well. And if you can learn how to sell a small percentage of what you can't afford to lose at the top of these moments, when you know it hits 800 billion and goes up 200 billion in a very short period of time, and buy back down here, obviously you're starting to become a bit of a pro trader. And I think it doesn't take too much to get a grasp of this if you're patient, and again, if you zoom out and go and do your research on what all of this looks like. But that's all I've got. I'm going to do another video on some ICO stuff that I've been asked to do, just some little website reviews. I've got WePower and a couple of others, a couple of data-based tech that's going to be launching very, very soon. So I'll share that with you in the next video. And yeah, again, let me know what you think in the comments. And I'm in excitement for 2018. And I think we're going to, anyone that's going to get involved is going to have a really good year. So yeah, be diligent, and thanks for watching. Cheers.